Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, had an interesting discussion about is it possible for Bitcoin to be confiscated? And it was interesting chat on account of there's all kinds of articles about Bitcoin being confiscated in the past. So I wasn't sure how it became a debate. But somebody in the middle of the debate launched in a video to watch, and I paid attention to it. And it's a very informative video that I want to share with you. So I'll share that video with you because the man does bring up some interesting points that should be taken in consideration. When we talk about confiscation of cryptocurrencies, there are a ton of loopholes out there that people are unaware of, but you can fight those loopholes. There are different ways to protect yourself. In the 1930s, when they confiscated gold, not everybody turned in their gold. They didn't go door to door asking people for their gold. People voluntarily turned it over. That's the freaky thing. Those who didn't held on to it. The government was offering $20.67, I think it was, an ounce for gold, and then later turn around and revalued it at $35. That was something like I don't know, 69% increase or somewhere in that neighborhood. Anyways, that's just the government for you, the sneaky little crap that they pull. You have to be prepared for it. So you can imagine them going around trying to confiscate cryptocurrencies. It's easier to do than gold and silver. But like I said, you can protect yourself. You could take it offline with you, and who knows later down the line when maybe they revalue cryptocurrencies. I'm not saying it's going to happen, but let's just say for chits and giggles that the government decides to use it as some form of asset to put on their books. They take it from people at one value and then turn around and outlaw it for about 10 years and turn around and say, okay, we can start using cryptocurrencies again. You can start using Bitcoin. But now the Bitcoin's worth, 3, 4, 5 times that amount. Well, those you who hit it properly can then jump back online and boom, there you go. You have something of value. I mean, I'm just oversimplifying this, but we're going to get into that. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. You should be buying gold and silver right now. Take advantage of these freaky markets. They are purposely holding down the value of gold and silver, so don't let this opportunity slip by. When you go to buy your gold and silver, go to our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, get a free half ounce of silver. So right now we're seeing cryptocurrencies move in the green. Don't get me wrong, Bitcoin is in the red, but not by much. They're still above 47,000, which is a nice little jump. 47,120 bucks for Bitcoin. Looking at Ethereum at $3,400, it looks like cryptos were trying to make some type of recovery. XRP still lingering though around the 86-cent range. Cardano at $1.20. Solana, good lordy man, jumped up to $122. Polkadot back up above the $20 level at $22.80. Dogecoin finally getting past the 12-cent mark, sitting around 14.5 cents. Shiba at 4028. Congrats on that one. Polygon at $1.71. Crypto.com at almost 48 cents, sitting there at 47.9 cents. If you look at the 52-week average, you can see the blue dots are approximately at the halfway mark for a good handful of them. Still away to the left for most of them, though, which is not good. So for a while there, the chart was following the Wyckoff, and I thought for sure the period would be shorter than the last recovery period, and we were looking at somewhere around the middle of February for it to take off. Well, heck, we're at the end of March, and it looks like it's moving up. If that's the case, we're going to continue to keep an eye on it and see if it continues on the same pattern of the Wyckoff, but just had a longer accumulation state. Satama's catching new wind now. There's a lot of new chatter about what's going on with them, and let's hope that it's all real this time. They have had a lot of problems, but I still have not even sold not one single share of my Satama nor my Shiba. 7012 for Satama, down 8% overall over the last 24 hours, but over the last hour it's up 0.2%. Over the last 7 days, it has been up 11.1%. Over the last 14 days, it's up 1.2%, but over the last 30 days, it is down a total of 26.2%. Gold and silver having a bumpy ride. As you know, they started to take off once again and then got hit really hard. And silver's been waddling around about the $24 mark, but you can see right now it's at $24.66. The other day it took a huge drop. It was at 24, almost $25. All of a sudden, magically, it dropped down. I think it was almost $1, and then all of a sudden shot right back up again. But ever since March the 8th, they have been on a slow decline. Not very much, but again, we all know what's going on with these markets. Midterms coming up, they're going to do whatever it takes to mislead people into believing our economy's peaches and cream. So as usual, whatever's happened to silver, you can say the same thing is happening to gold. Gold at $1,926.70. Take a look at the chart by hour. Same thing happened on that day. Huge drop and then a recovery. And ever since March 8th has been on a very slow decline. But again, gold goes up slow, comes down slow. They will go up. Both of them. And you should have gold and silver to keep yourself protected at all times. So one of the things I was talking about during the discussion of cryptocurrencies being confiscated, I said there's plenty of articles out there that show you that the government has confiscated Bitcoins in the past. Right here, you can see on February the 8th of 2022, the United States Department of Justice, that wasn't that long ago, announced a landmark seizure of 94,000 Bitcoin valued at $3.6 billion. So it's just a little under 2 months ago this happened. This is the largest single financial seizure in the department's history. 2 individuals were arrested and charged with conspiracy to commit money laundering and conspiracy to defraud the United States. So when you go down here, you find out there was a couple of hackers. It said in 2016, a hacker infiltrated one of the world's largest virtual currency exchange and transferred 119,754 Bitcoin. Yikes. That's huge. And they did it from the exchange and put it into a private wallet. At the time of the hack, the stolen funds were valued at about $71 million. Not now, man, that's for sure. Since that time, the value of the stolen Bitcoin increased to more than $4.6 billion. So anyways, the law enforcement did their job and they were able to backtrack and find the cryptocurrencies and they were able to seize them. I will go ahead and leave the link for this so you can read the whole article and you could see in detail how it was they were able to confiscate the cryptocurrency. Now, as I was stating in the chat, it really was great conversation. I love it when you have some very knowledgeable crypto people on there going back and forth and trying to explain things to people. But they didn't try to blow smoke up people's butt. They said, look, of course cryptocurrencies can be confiscated and there are ways to protect yourself. And they went on with a bunch of other things that I found that was very knowledgeable and entertaining. And then somebody dropped this video in here and they said, look, go here. This is a great video that explains how the US government can destroy Bitcoin. And I told you the government at any time, and that's any government, can destroy the cryptocurrencies. They can confiscate them. You can't get away with it. You know, people are like, well, if it's on a decentralized platform and blah, blah, blah. Well, they're not talking about hacking. What they would do is what I suggested, and that was they could put so much pressure on the exchanges that the people that run the exchanges who wouldn't want to bump heads with the government, they would turn around and comply with the government. And that's what you don't want. But let's listen to this video because it's very educational and something you should think about when you're dealing with your cryptocurrencies.
This is Matthew Cratter from Trader University.
Oh yeah, so this is Trader University. I will leave a link to their YouTube channel. Kudos out to them. They have a lot of different videos I think you'll find educational.
And today I want to talk about one way that the U.S. government can use to destroy Bitcoin. This is not silly theories like they're going to hack the algorithm or that there's some backdoor to SHA-256 that was left there by the NSA. It's not a theory like that. It's actually a much simpler version. And it has to do with the fact that right now Coinbase is the #1 app in the App Store right.
Now you can see this video is from around October of 2021. but it's still relevant.
Now, the Apple App Store. This is a very good sign, of course, that we're about to get huge retail flows into Bitcoin. So it's very bullish short term for the price. But companies like Coinbase really are an existential threat to Bitcoin. And that's what I'm going to be talking about, how the US government can use them to basically functionally destroy Bitcoin. It goes something.
Yeah, I can't help but comment on this. Okay, this guy's talking about these really reputable exchanges where people buy, sell, and trade cryptocurrencies. He's saying that they're not your friends, and they are an existential threat to cryptocurrencies, which I found interesting to hear, of course, but this is why I suggest to people to take your cryptos offline.
Something like this. We have all these ways of buying Bitcoin now, which is actually very good. It's very good for adoption. Everything from Coinbase, Gemini, Kraken, Square, the Cash App, PayPal, Robinhood, GBTC, the ETF, the new Bitcoin ETF, the futures ETF, BITO. So these are different ways that you can buy Bitcoin. But the biggest problem that is caused by them is that people buy Bitcoin using these different channels, and then they leave their Bitcoin. They leave it on the app, they leave it on the exchange, they leave it somewhere where it's held by what's called a custodian. So if you leave your Bitcoin wherever you buy it and you don't withdraw it and hold it and control your own private keys, you are basically allowing someone else to hold your private keys for you. This is what's called a custodial solution. You may see the phrase non-custodial wallet. That means basically you get to hold your own private keys. A custodial wallet, or leaving your Bitcoin at Coinbase or Kraken or Gemini, or leaving it on the Cash App or on PayPal, basically you're leaving your Bitcoin in the control of what's called a custodian. A custodian is just someone who holds on to your Bitcoin for you. And a lot of these companies, they're well run. Their custodians are fairly safe. At least we think they're safe. Again, if you're not controlling your own private keys, you're not really controlling your own destiny.
See, that's kind of like gold and silver. If you don't physically have it, then you don't own it. So this guy's saying, look, when it comes to your cryptocurrencies, if you don't have it somewhere private, then you don't technically own it.
The way you can know whether you are holding your own private keys is whether you need to ask someone to move your Bitcoin for you. So for example, if you're holding Bitcoin on BlockFi and you want to withdraw it, it might take 2, 3, 5, 7 days to withdraw it, and you have to send them an email or click something on their website, get permission from them. Likewise with Coinbase, you have to ask them to withdraw your Bitcoin. And this is how you know that someone else is controlling your Bitcoin. If you have Bitcoin in a hardware wallet, for example, you can send it to anyone anytime you want. It's instantaneous. It's instantaneous if you send it using the Lightning Network. If you send it using the base layer, take anywhere from 10 to 60 minutes to confirm. This is what happens when you control your own keys. Now, this is very important, and we're going to see the reason why, and why not controlling your own keys is an existential threat to Bitcoin. If you bought GBTC, for example, which is a trust that holds Bitcoin, their actual Bitcoin is being held by Coinbase Custody. So what you have when you own GBTC, it's basically paper Bitcoin, or it's a Bitcoin.
Ooh, okay. This is getting right into what it is that I hated about cryptocurrency when they started allowing corporations, trusts, EFTs, banks to start jumping into these games. Grayscale Bitcoin Trust. So you could buy cryptocurrencies, paper versions of them, just like you can gold and silver. You have ETFs. We run into this issue with the comics and the LBMA constantly lying about what's on their books, manipulating the markets. They use the paper market to control the physical market. Knowing that Grayscale and companies out there like JP Morgan and Chase, anybody like that that's dealing in derivatives or allowing you to buy ETFs or paper versions of cryptocurrency, this is bad for the crypto world because they can use that paper to do the same thing to cryptos that they're doing to gold and silver.
Bitcoin IOU, the real Bitcoin, and it's hopefully there. We assume it's there. It's being held by Coinbase Custody. if you buy Bitcoin and leave it on BlockFi, it's basically being held by another custodian, the Gemini Trust Company. We already talked about Coinbase Custody. This is probably the biggest custody company in the world right now. It's a separate, I believe it's a slightly separate company from Coinbase. They have two legal entities. Bitco is another really big one, a custodian that was really more for institutional investors. They've recently been acquired by Galaxy Digital. So we can see a world where we have just a few large custodians. This is how it always happens. There are economies of scale, and they're very good business reasons if you're a custodian to grow your book. But the problem is Bitcoin custodians like Coinbase Custody, like Bitco, like Gemini Trust Company, these are like giant banks full of Bitcoin. And now there's a process underway to allow actual U.S. banks to custody Bitcoin as well, rather than these specialized entities. So you can have Wells Fargo become a Bitcoin custodian, or Goldman Sachs, heaven forbid. So
Yeah,
now
heaven forbid
let's
it,
fast
right.
forward a couple years from now. This is not a threat today or tomorrow or next year or probably even the next year. But let's fast forward maybe 5 years. Imagine a world where 2 or 3 Bitcoin custodians are holding most of the world's Bitcoin. Most of the US's Bitcoin, most of the world's Bitcoin, however you want to imagine it. And then remember what happened back in 1933 with Executive Order 6102. This was the executive order signed by President Franklin D. Roosevelt, making the private holding of gold illegal. There were some loopholes for dentists and jewelry, but basically this is how it worked. You were required to give the U.S. government all of your gold. They bought it from you. They're very generous. They bought it for you for $20.67 an ounce. And once they had bought up all the gold, they immediately revalued it to $35. This was one way they funded. They basically added a lot of value to the U.S. government balance sheet. And this is where most of the gold in Fort Knox came from. It came from confiscating it from the American people, the land of the free, the home of the brave. This was already happening under one of our worst presidents, who was FDR. Now, this was especially easy for the U.S. government to do since most of the gold was sitting in bank vaults already. If you want something to be taken from you, a bank is probably the best place to store it.
See, like a bail-in, if you have something in your safe deposit box, you can kiss that sucker goodbye. It's not safe there. Taking money out of your account, then a bail-in is only part of the confiscation. They actually go through all the items sitting in the safe deposit box as well and confiscate anything that has monetary value to it. It's all part of the bail-in. I agree with what he's saying. If you're storing things at a bank vault, it's subject to confiscation. And that's what he's talking about happened when they confiscated gold. A lot of people were trusting that the banks would hold it. Well, the banks held it. When the government said, give it to me, of course, the banks are going to comply.
There's that old saying, the guy who robs banks and says why does he rob banks? Because that's where the money is. The U.S. government has a history of robbing banks as well. There's the famous case of this New York attorney named Frederick Barber Campbell. This is from the same Wikipedia article. I just excerpted it here. He was storing his gold, 5,000 ounces, at Chase National Bank. He tried to withdraw it, and Chase refused to give it to him.
Okay, just, my heart's breaking right now. This man had 5,000 ounces, and it was taken from him. So they confiscated, with today's value, those 5,000 would be around $9.6 million.
And basically he went to court and lost, and the federal government was able to seize his gold. This is just one of many cases. As I said, the absolute worst place to store something is at a bank if you distrust your government. Now,
I distrust
would say the
my
US
government.
is not quite there yet, but we're definitely getting there. And the talk of an unrealized capital gains tax, which we talked about a couple of days ago, it looks like this is out of the bill, so it's not going to happen. But when you start seeing even potential ideas like this discussed, you know that your government is becoming less and less trustworthy. So how can the U.S. government destroy Bitcoin? The first step is allow Bitcoin to become concentrated at 2 to 3 custodians. And once this has happened, and this could be done in coordination with various world governments, maybe with the EU or China, and there could be a global concentrated effort at some point. Again, I don't think this is going to happen next year or even the next year, but you could, if the Bitcoin is all being held at these large institutional custodians, all you need to do is do a coordinated seizure of these custodians and take the Bitcoin, and then they could revalue it for themselves, or they could just say, we're holding it, we're not allowing it to circulate anymore, something like this. And they'd be able to do this since you are not holding your own private keys. When you store your Bitcoin, when you leave it on an exchange, who leaves it with a custodian? If all 330 million Americans end up owning Bitcoin, and they're holding their own Bitcoin, they're holding their own private keys, this can never happen. Bitcoin was intended to be this freedom technology, this form of decentralized money. And what's happening, because...
So did you hear what he said? He said, so move your cryptos off these exchanges. Put them into your own private wallet. The only time you should have them on these exchanges is if you plan to sell or trade them or send them to somebody. Other than that, keep them off the exchanges. Everybody should do that just to protect themselves.
Of giant companies like Coinbase, which are opening up the market to new investors, which is great. Though Coinbase, of course, seems right now is much more focused on pushing garbage NFTs and all of their casino coins. But you can't deny that they're helping adoption. But what we really need now is the education, and that's really what I'm focused on in this channel, is to teach people how to hold Bitcoin. If you hold your own Bitcoin, if you control your own private keys, it's better for you because no one can confiscate your Bitcoin. And it's also better for the Bitcoin ecosystem and the future of Bitcoin because it doesn't end up being concentrated and being held by people like Brian Armstrong at Coinbase, and eventually possibly being seized by hostile governments. I was thinking about this the other day, and someone had asked me what the most widely used layer 2 is on Bitcoin. We have the base layer, the blockchain, and then we have various technologies built on top of it. We have the Lightning Network, we have the Liquid Network. These are well-known side chains or layer 2 solutions. But they're not, I don't think they're the most widely used layer 2 solution on Bitcoin. I think layer 2 is really, unfortunately, all of these companies. People will enter Bitcoin, they'll move their Bitcoin from Coinbase to Gemini, especially if they're doing high frequency trading. Maybe they'll just they'll buy Bitcoin on Robinhood and you can't even withdraw it from there. And this is sort of the layer 2, the most widely adopted form of layer 2 for Bitcoin. Basically, Bitcoin that circulates inside of these big tech companies. And I think this is a very bad place for it. It's bad for Bitcoin. It's bad for individual holders of Bitcoin. The real layer 2 solution should be decentralized solutions like the Lightning Network, for example. So what do you do if you own Bitcoin, if you're storing it at a place like Block?
All right, here you go, because a lot of you already knew you're going to ask me a ton of questions about where to possibly go. So when I saw this video, I was very happy that he's going to go ahead and explain to you and make suggestions about where you should consider moving your cryptocurrencies to protect yourself.
If you're storing it at a place like Coinbase or really any of these companies, you need to withdraw your Bitcoin, both for the safety of your coins, but also to help the ecosystem. If you believe in the Bitcoin mission, you need to buy a hardware wallet. Blockstream Jade looks really cool. I haven't tried it out yet, but this is a very legit company, completely open source hardware wallet. In the past, I've recommended Trezor. Again, I'm not being paid by any of these companies. I have been using the Trezor in the past, and I'm looking also to explore the Blockstream Jade hardware wallet. The one wallet I would not recommend is the Ledger Nano. They have some non-open source software. Their firmware, for example, is not open source. The problem with this is you don't know what is in there. The nice thing about Trezor and Blockstream is their code, their firmware, their software is completely open source. And so you can see whether there are any backdoors, whether there's any hostile code in there, and there's constantly a stream of eyes on the internet looking at.
Okay, that's good to know. I did not know that. So, scratch getting a nano ledger because obviously a nano ledger does not protect you. There might be some secret software on the nano ledger that is harmful to your privacy and to your holdings of cryptocurrencies. You don't want that to happen. It's just food for thought. But he didn't say you knew for sure. He said it's possible.
Their code. People can't do that for Ledger. So Ledger seems to be an honest company at this point, but if it were ever to be taken over by dishonest actors at a point later in the future, they could insert some code onto their hardware wallets.
Okay, there's a clarification. So he's saying, look, right now, Nano Ledger, there's nothing nefarious there. If somebody with a nefarious agenda came along and bought the company, they can just quickly seize all your cryptos. Of course, if you have it offline, they can't seize it. But as soon as you come online, it can be seized if the software is embedded into your Nano Ledger. Okay? So something to consider, right? He didn't say they were doing anything nefarious. And he does not know 100% whether or not Nano Ledger has anything nefarious going on. He's saying that because the way they are set up, there's always a possibility, and that's what you want to avoid.
And in one fell swoop, confiscate everyone's Bitcoin who's holding it on a Ledger wallet. So all you need to do, it's actually much more simple than it sounds. You buy one of these hardware wallets, and then you just go to the help section of Coinbase or wherever you buy your Bitcoin, and they'll tell you how to withdraw it. You click a withdraw button, and you send it to the public address that's associated with your hardware wallet. This sounds difficult, but again, it's actually quite easy to do. I always get the question too, though. People say, well, I only have 0.01 Bitcoin, which at today's prices is worth about $610. Does it really make sense for me to buy a hardware wallet for $50 to $150? I think the Blockstream Jade is closer to $50. If you get the Trezor Model T, it's closer to $150, $200. So it doesn't really make sense to spend $150 on something if what you're storing on there is only worth $610. Well, I think you have to look forward, though. If you're holding Bitcoin for the long term, it means you're bullish on it. And I'm extremely bullish on it. In a few years, when Bitcoin hits $1 million per coin, that 0.01 Bitcoin that you own is going to be worth $10,000 instead. So at that point, it really does make sense to invest $150 or $50 to $150 to secure $10,000. When Bitcoin goes up another 10x, that 0.01 Bitcoin will be worth $100,000, hopefully in today's purchasing power. And so you should really learn how to do this while Bitcoin is still relatively cheap and while the dollar amounts that you're dealing with are still relatively small. And when you move your Bitcoin from the exchange, from Coinbase to a Trezor to a Blockstream Jade, you move a very small amount at first. Maybe move just $5 or $10 or $20 or whatever a small amount is for you, just to test it and to make sure that you've done it in the right way. Here's the takeaway. People leaving Bitcoin on their exchanges is not just an existential threat to their wealth, to their own holdings, because anyone can confiscate it. U.S. government can come to BlockFi or Coinbase and say you're actually a bad person, freeze your account. This can happen, but it cannot happen if you're holding your own private keys. If we do end up with a situation in 5 or 10 years from now where Bitcoin is overwhelmingly concentrated on exchanges and being held by just a few custodians, there's a real existential threat to the system. And this is not what Satoshi intended. This is not how Bitcoin is intended to be used. We need to make sure that it remains highly decentralized and that people are running their own nodes, they're controlling their own Bitcoin, they're holding their own private keys. And I should have mentioned that the way you hold your own private keys, this is the function of a hardware wallet. Your Bitcoin is not stored on a hardware wallet. It's essentially just an item in the ledger, in the open ledger, which is the blockchain. But what your hardware wallet does is it stores your private key. And then when you want to move your Bitcoin, you basically plug in your hardware wallet, you sign with it, you do a signature with it, and then that moves your Bitcoin. It's very important as well when you set up a Trezor or a Blockstream Jade to make a recovery seed backup. This is 12 or 24 words. In case your hardware wallet gets destroyed or lost, you can reconstitute your holdings using your recovery seed, which again is like 12 very simple English words.
Anyways, that was Trader University. Like I was saying, I will leave a link to the YouTube channel. There are plenty of things on here that you would be interested, I believe, in hearing about. But I thought that information that was shared is important. Take your cryptos off the exchanges and put them onto a wallet that only you have the codes for, just to protect yourself. It's like people who own gold and silver. We don't do paper gold and silver. We actually own the physical gold and silver that we keep personally. Anyways, that's it for now. Let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel. And I surely do appreciate it. And I'll catch you later. I'm out.